Today, we're going to focus on the macro picture of crypto. Probably the biggest bull market to date. Bigger than 2017, bigger than 2021, and we're going to look at why. But to really understand the why, we're going to need to look at the technicals as well as the fundamentals. Now, the technicals tell us the price psychology and the buying and selling behavior of fear and greed. So it's literally applied social science, applied psychology. And I'm just going to touch on that in a second. And then we're going to look at Web 1, Web 2, Web 3. And Web 3 is what we're moving into, and Web 2 is where we currently are. So I'm just going to pull up a market cap chart. Now, you might have seen my YouTube content the other day, and I know some of you commented, some of you said it was my best to date, so I appreciate the kind words. So what we want to look at when we're looking at, this is since 2017 and the recent price behavior. And you know what I always go on about, right? It's buying and selling behavior, fear and greed. And what's happened over this period is we had a phenomenal bull market, right? But what most people don't realize, especially if you're new, what it felt like over here, back in November 2021, is what it felt like in pretty much November 2017, right? Before the big correction. And these markets moving these 1, 2, 3, 4, 5. Right, and it's typical crowd psychology. And when we see this kind of buying behavior, short, medium, and long term, and this is the macro, typically you'll get a correction. Now, this has been a deep correction, the 78.6%. So what I'm saying today in the workshop is really how to prepare. Now, the first part is, what's the likelihood of it actually occurring, right? What's the likelihood? Because some people might just go, nah, they're not going to put that much money into crypto, where we've got this 1, 2, 3, 4, 5, almost a $3 trillion market cap. And now it's less than $1 trillion, right? What is it right now? It's like $800 billion market cap. It's like, GK, you're saying that it's probably going to get to $5 trillion over the coming years? You know, what's the likelihood of that happening? Why that means institutions are going to get involved, and hedge funds and the big boys and countries and treasuries and whatever else. That's a serious amount of money. That's like 50% of what gold is valued at right now. So that's why we're going to dive into the tech stack, into the fundamentals, right? So the technology. So Web3 economy, right? This is going to be so important for you to understand. It's going to put you leaps and bounds ahead of everyone else. So let's just go over this. So what is Web3? Okay, let's just go back a second. I'm going to loop back and forth on this. When the internet first took off, no one could really, or the masses could not really vision what the world was going to look like today. Like, you know, having a phone that has a TV in it, practically, right? You might be watching this on your phone, which is like a TV, all the technology. But a couple of decades ago, you just couldn't see it. So Web3 economy is blockchain, it's crypto, it's NFTs, it's the metaverse, and it's a new technology that enables things that's never been possible before in all of human history. And it's ownership without a middleman. And it uses smart contracts, decentralized finance, and decentralized storage. But the tech isn't there yet. The mass adoption isn't there yet. The simplification isn't there yet. Now, since 2017 to now, there's been a massive improvement. Like, if you was around in 2017, if you thought it was hard today, back then it was even harder. So Web 1, right? It's static images. It's read only. Now, believe it or not, it was actually decentralized. But it was very, very basic. But then the market grew, especially in 2006 when broadband took off and everything moved to a whole different level. And that's when we went to these platforms. But you could now not only read, you could also write. So there was an interaction for the first time. And no one knew what the use cases were going to be. But now, like, I'm planning to go to my sister's house after this. So I got to finish on time today. I got to finish bang on 12. I'm gonna call it Uber. And I'm gonna select, you know, the one that lets me take my dog. So we're gonna go to my sister's house. But that's ordering a taxi through Web 2, right? But the problem with Web 2 is the power is in the centralized parties with data and everything else, and it means we as the data providers, we don't get the ownership. So Web 3 is now moving into decentralization, and the technology has begun since 2009. That's the official, when Bitcoin first had it produced its first block in January 2009, the technology is moving into ownership. So I'm just going to touch upon that. So Web3, the information economy. So Web 1, static, read only, the information economy. Web 2 is like the platform economy, like social media. Like it's been an absolute revolution where people are watching more social media than actually actual TV. Whereas a few decades ago, that wasn't the case. But where we're moving is the ownership economy. And remember, the reason I'm telling you this, and the reason we're going over this today, is the market capitalization. What technology is going to be required? Well, what is blockchain? Well, Ethereum is a blockchain. Well, that means if they're going to use that technology, then that holds value, both from a speculation standpoint, but also from a utility standpoint. So Web 1, read. This is really, really important. Web 1, read only. Like our eyes there. We cannot import. Web 2, we can read and write. So, we can post on social media, we can write a blog, we can upload a video. This will go onto YouTube later on. We can interact. But Web 3, for the first time in all of human history, we can own. We go, get our own stuff ready. Yes, but it requires a centralized party, right? You need a bank, an intermediary right now. Your insurance, your assets, your house, everything. There's a middleman always involved. Here, for the first time, there's no middleman. That's a big change. That's probably one of the biggest global shifts in all of human history. And 99, maybe 98% now of the human race has no idea on what's happening under the radar. So Web 1, think about it. Web 1, when it's static, you have a username and password, which is similar today. But now we got email and we got platforms that makes it easier for us to interact with Web 2. But what is Web 3? Well, when there's blockchain, you need something called a wallet. So Web 3, Ethereum has its wallet. You have other blockchains like Solana, like Binance Chain. We've got Avalanche, we've got Polygon. There's quite a few different blockchains, just the same way we had quite a few different search options. We've got Google, Yahoo, there's Bing, there's quite a few back in the day as well. So Web 3 is now really using, it's just new. The hardest part is it's new. It's different. It's not that we're not going to be able to do the same things, but the technology behind what allows us to do the thing is more efficient. There's more transparency. There's more trust because we trust in the code, which cannot be, it's immutable. We can't change it. We can't tamper with it. It's very, very secure. So remember why we're looking at this. It's like, why is there going to be trillions of dollars over the coming years pouring into this space? Which means when people pour money in, price goes up, right? It's the supply and demand. So let's just talk about utility, right? So we're working on a Web3 project right now ourselves. I'm going to give you a practical use case in terms of NFTs, but where are NFTs built? I'm not going to go into too much detail on what NFTs are. That's not the purpose here. I just want to open your eyes up to what's actually happening under the radar. And then the next 3 years, 5 years, 10 years is going to become a commonplace. Just the way email back in the mid-90s was like, what is email? And now it's a commonplace. You'll be a weirdo if you don't have an email account. That's just the nature of it, right? So one of the use cases is, in terms of tokens, blockchain, and ownership, is NFTs, something called non-fungible tokens. And there's many use cases. Like the internet has many use cases. And in the early days, people thought it would just be used for reading, maybe streaming something like the radio, I don't know, email only. But now the whole world has revolutionized. We stream our media through the internet itself. One of the use cases, and we're actually working on this ourselves, is token-gated access, and it's going to be the future. And I'm gonna do some future stuff on this. So a case study. So how did you get on today's Zoom call, right? Well, you use Web 2, right? You clicked on the link, you're registered, you put in your email, done, right? That's Web 2. Easy, simple interaction. But now we're going to move into Web 3. And what would Web 3 look like? And this is happening, and we're actually working on this ourselves, is rather than you putting in your name and email, I may only want people in this particular workshop that have purchased one of my NFTs. And that tells me it's unique, and I want you to give special privileges. So what you'll need to do is connect your wallet. Now, if you're new to the blockchain, don't worry about it. I've got some other training that I'll point you to at a later date. But I'm going to be talking a lot about this because I just realized people are not seeing it yet. People are not seeing it. So you'll connect your wallet. And in your wallet, if you have the NFT, and by the way, this is the ownership. You own the NFT. And I'm going to show you the significance of owning the NFT versus just logging in with name and email. If the NFT is in what's called your crypto wallet, which connects with the blockchain, let's call it Ethereum, the software will read if you have that NFT. And if you do, fantastic. So it look like this. I've just put an image of myself. These are some of the designs we're working on. It's not finalized. This is one of the old designs actually. But let's just say you had the NFT in your wallet. It has a smart contract associated with it. So the smart contract is pre-coded. It can never be changed once it's launched, but that contract will be fulfilled and delivered. And it sits on a blockchain. So different blockchains, Ethereum is the most popular, Solana is another one. And these are two, by the way, I'm choosing these two. We've got long orders in the done for you service on both Solana and Ethereum. So I know the price has been volatile, but we want to see, is there underlying value there that people are going to have a reason to buy it in the future, near future as well, days, weeks, months, and years. So in terms of the utility, I just want to kind of get your head thinking about where engineers are working on this in terms of blockchain, Web3. People are coming up with new utility. So let's say you've got the NFT. If you have it in your wallet, this will show up. Join the meeting, pop in your name. So one of the things that I'm going to be doing is one-to-ones, right? I want to give more value, especially when we hit the bull market, because one of the most requested things from me is one-to-one time, right? But if you got this NFT, you'll get my one-to-one time. But it's like, what if someone else connects the wallet that hasn't got the NFT? Then what would happen? Well, then something like this will pop up and say, look, you're not authorized to access this meeting. You need to go buy the NFT. And if it's not on the marketplace, then you just can't access it. But what does that mean? Well, if you own the NFT and someone else wants it, well, there's supply and demand, but you own it. I don't own it. You own it, which means you can then sell it on the secondary market. So now you'll see that there's this new economy being created where the power is in the individual, which has never been the case before. We've always needed the centralized party because these interactions are actually happening without someone in the middle. It's just pure code, which is the smart contract, which is the blockchain. So again, I'm just going to reiterate just to make sure we keep the main thing. We're talking about the market potentially at some point. We don't know exactly when, but we believe at some point is going to end up doing something like this. Like, well, why would money pour in to crypto, blockchain, NFTs, Ethereum, Solana, Bitcoin? Well, I'm giving you the reasons that it's pretty much a done deal. The technology is so advanced now, it's pretty much a done deal. But then you go, okay, what else can I do with these NFTs? Well, let's just look at this for a second, right? So NFTs can have different utilities. Some are just digital art, right? It's literally just art where we go, you have this image, people have, I don't know, it could be a one-of-one piece of art and people want that art for whichever reason. But because of the smart contracts, because of the blockchain, we can bake in different types of utility, and the only limitation is your imagination, right? So it could be, so this is some of the stuff that we're working on, access to our done for you service, but lifetime. So if you got this NFT, you get lifetime access. Access to courses. So you log into our platform, and people that have certain NFTs will get gated community. The gate will open to allow them to view certain content. And if you haven't got the NFT, then you can't view the content, right? So rather than just email and login, but what it means is the person now owns the course. And once they're done with the course, they might say, I want to sell this NFT because now someone else might want this course. And it might be just limited to like 100 people. Monthly one-to-ones. So the NFT may have an access level, a utility, which is a monthly one-to-one with me or a one-to-one in whichever way. And people can use that. Art and collectible, right? So now this is how I want you to think. Because an NFT could be just like Bitcoin in the sense that it goes up in value and it goes down in value depending on the perceived value. So right now, our YouTube channel is just under 20,000 subscribers. But imagine in the near future, it was 2 million. And the amount of content we're producing in the bull market, we're probably going to hit 100,000. But let's say it hit 2 million. What would that tell you about people wanting to access my content, which is gated and limited supply, and even my one-to-one time? Well, if it's supply and demand, well, when people want to buy something, then the price goes up. If there's more people that want to buy a house in a bull market, the price of the house goes up. So what would happen with the price of the NFT? Will it go up? This means the owner of the NFT could go, you know what? I don't want to sell this NFT, but the price is now so high, I need to consider it. So what would it be worth on a secondary market? So you can actually list it on a secondary market, which is the equivalent of an eBay, but for NFTs, and sell. It might be double the price that you bought it. It might be 10 times the price that you bought it. So why am I telling you this? Well, the reason is blockchain, Web3, cryptocurrency, the underlying technology that's going to revolutionize the world more than the internet itself, right? More than the internet itself. That most people haven't seen. Now, in 3 years, it'll become much more common. In 5 years, it'll be like an email address. Maybe 5 to 10 years, an email address. Everyone's going to have one, and big brands are going to be using this technology much more. So now, if we just go back again to the market capitalization, because what we're talking about is Elliott wave, Fibonacci price, Fibonacci time, momentum strategies, momentum, double time frame momentum. But what are we really measuring? Well, what we're really measuring is crowd psychology, applied crowd psychology, human nature, which goes back centuries, not just crypto. Gold was the same. The tulip mania was the same. The dot-com boom was the same. It was as volatile as this in the early days. So this is why it's highly probable at some point very soon, some point in the coming months, definitely, I'd say definitely, very, very close to definitely, next 12, 18 months, we're probably going to hit a low. I think we're near the low just based on the current pattern position. But if we get the follow through, the tech is there to support it. The stories are there to support it. The use cases are there to support it. It's going to be a new version of Netflix, a new version of Zoom, a decentralized version of Amazon. There's going to be people just trialing and testing things. Like with any business, many are going to fail. That's just the nature of it. But when there's something that's 10 times better, people tend to adopt it. When it's more than 10 times better, it's cheaper, it's faster, it's more transparent, you got more control, you can get ownership, and so on and so forth. All of a sudden, the game changes. But what the world doesn't know yet is that the game, the foundation for the game changes is already in place. So it's almost like it's happening. It's like the tree has been planted, the soil is just guaranteed to be like A-star, unless there's like a black swan event, which is, 1 in a trillion kind of thing. It's a done deal. So when I say the next bull market, again, we're trading, the current trend. So we're long on Ethereum, we're long on Solana in terms of we've got orders in for the done for you service. So we're going to, the markets are going to move up and down, right? They're going to move up and down, and that's fine. That's fine. But today was really about opening your eyes and see, can you see what is likely to happen and what's going to drive the price?